Hello and welcome to this very special edition of Easynomics on Business Today television. What a day it has been on the Indian stock markets. An exit poll, directionally all of them predicting the return, projecting the return of Prime Minister Narendra Modi for a third time, and investors voted with their feet, voted with their money, shorted the shots and sent up the Nifty and the Sensex on a rocket ship ride. The markets closed after some gains seem to have been booked, and a clear message being delivered by today's market that the Indian stock market is Atmanirbhar and the foreigners perhaps looking for new strategies, fresh strategies to come in. But with hours left for the result of this long fought, very hard fought campaign for the 2024 Lok Sabha elections, we want to try and understand what could be the implications for the broader macroeconomy of a verdict as has been projected by the exit polls. And joining me today is a fantastic panel of the best names who've tracked the Indian economy, the market and business for decades together. Sourav Majumdar, my colleague and the editor of Business Today magazine. Shailendra Bhatnagar, the editor for markets at Business Today television. Shankkar Aiyar, political economy analyst, author and columnist. We also have Madan Sabnavis, chief economist at the Bank of Baroda, one of the scripts that went on a rocket ship ride on the Modi premium and the return of Modi 3.0. Welcome, Madan. Dhiraj Nayyar, chief economist at Vedanta, one of the storied companies that's old economy company but with a new economy footprint. Thank you very much everyone for joining us today. I want to start with Shail. Shail, it's been a busy day for us, trying to track the markets. All of Sunday yesterday we did special programming to try and help make sense of how the exit polls could have been seen. And as you try and sum up markets today, a colleague on the news floor was trying to compare the 12 lakh crore that was gained today added to the wealth of the Indian markets with our neighbor Pakistan and its GDP, but we'll not go there. I just want you to tell our viewers, how have the markets performed today, and is this what is likely to happen on counting day as well?
Siddharth, thank you for having me over. We've had a fantastic day as far as markets are concerned today. And investors, as you rightly said, have voted with their wallets and opened their hearts to PSU stocks in particular. The two top performing indices were the Nifty PSU Banking Index at a record high, up 8%. I haven't seen an index rise 8% in a single day. And of course, the favorite CPSC index where all major Navratna PSUs reside, that also rose 9%. So it's been a fantastic rally. Needless to say, a record high on the Nifty as also the Bank Nifty. Investors are enthused with the fact that there will be continuity as far as regulation is concerned, and of course Modi 3.0 will mean a lot of money for the entire PSU pack. Remember, over the last 18 months, Siddharth, the outperforming sector has broadly been the PSUs, and within them public sector banks, railway stocks, and of course the large power enterprises such as NTPC, such as Coal India, something that powers India in general. Siddharth.
Good points there, and stay with us, Shell, because we'll get deeper into it. Saurav, I'm coming to you. The Adani-Ambani pack also on a rocket ship ride today. The Adani groups combined erasing all the negative that we had seen after the Hindenburg report. Reliance Industries up amongst practically every other stock. We just saw a sea of green all through trading day today. But what's the broader message here? Is this investors in anticipation, or is this also vote of confidence and realization that there's a Modi premium for corporate India that is at work here?
Well, Siddharth, I think it's not really about a Modi premium. I think what the market is trying to say and the signal, and we all expected that it would be a seriously gap up opening today, as we have been discussing earlier as well. The point is, I think there is a vote clearly, and if the exit polls are correct, it is a vote for stability, policy continuity. I think one thing the markets hate is policy uncertainty, and I think the vote today, which you see the markets voting overwhelmingly for a hope that there will be policy continuity. And as far as the Adani pack is concerned, the pack has been going up ever since, some of the clouds around the questions which were on the regulatory side have eased a bit somewhat, and I think overall they are also in sectors which the markets feel are going to be on the up move. So I don't see that as a surprise at all, and I think they've erased all the Hindenburg losses and moved up, and I think overall the broader markets, the sense is very clear that they have voted in favor of policy continuity, which is what they expect from Modi 3.0.
Sourav, good point there. Shankkar, I'm coming to you now. Is your sense, and you've been on our network all through the past few days, is this a sense that Modinomics 3.0 has been voted for versus Dole'nomics from a ragtag bunch, promises of takatak, khatakat, khatakat? Is that the way you see this vote?
Well, I think it's a choice has been made, and the choice is that if the Axis My India polls come true, that people want order. You see, chaos makes the threat of what happens is that markets like certainty, stability, they sort of abhor chaos. So the idea that there will be order and continuity is very seductive. When you have all kinds of parties making all kinds of promises, and there's so much noise, this chaos makes order seductive. So people have chosen order, stability, predictability, and I think today's rally is more like, we can come to the technicals in a minute, but today's rally is more a sigh of relief, and if these numbers pan out right tomorrow, you might see more of it. There's also the fact that I think the guys who went short have been squeezed out of shape. So we'll see tomorrow how much of that has played out. And it's interesting that that all the naysayers have sort of been put in their place in some sense in the rally, and of course today's bulls would hope that the numbers come true tomorrow.
Absolutely. And what's a bull market without a few bears on the sidelines? Madan Sabnavis, if the numbers prove to be true, directionally there doesn't seem to be any disagreement that there is Modi 3.0, but we'll wait for tomorrow to get those numbers. Do you think that this is a vote for fiscal prudence, fiscal consolidation versus reckless populism that we've already seen playing out in Karnataka, for example, or for Telangana, and real consequences for real projects like the Hyderabad metro as well? Madan.
Yeah, I would tend to think that continuity is what we could be expecting on the economic front. And since the very first policy which is going to be announced will be the budget, if I'm keeping the MPC out, because that's an independent decision to be taken on interest rates. So we could be expecting more of fiscal consolidation. And we have seen that in the last 5 years, the government has not really been reckless when it came to social welfare, even during COVID time. And at that point of time, we felt that the government was putting the onus of COVID relief more on the Reserve Bank rather than on the fiscals. So I think it became easier for us to go in for this consolidation mode. And given the latest numbers which came out on 31st, both in terms of the fiscal deficit for last year as well as GDP, it does appear that we could be reaching that 4.5% target in 25-26. And maybe when we have the July budget coming out, we could be looking at a number even less than 5%. So I think the focus will continue to be on that fiscal deficit number. will be on capital expenditure. So there could be some kind of an increase in capital expenditure announced by the government, especially given the fact that the private sector investment has not been in any hurry to come in. So the government may continue to do a bit of heavy lifting. And last, I would like to say is that the kind of benefit which the budget has on account of the transfer of the surpluses of the Reserve Bank, which came in as quite a surprise at 2.1 lakh crores, I think that will provide more elbow room. It will be interesting to see what the government does with it. Does it go in for a big shot at fiscal consolidation, or does it use these resources more for capital expenditure? So I think that's what would be the prudence would be the order of the day, and we would be seeing that at a greater level in the coming budgets.
Dhiraj, if Modi one was about certain disruptive decisions and also pushing through policy moves like GST as well as disruptions like demonetization, Modi 2 post-COVID was about a very large capex investment promise and continuing infrastructure spending. What do you think Modi 3.0 will be as far as the economic agenda is concerned?
I think what will be key going forward for the government and for the economy is to see two indicators look further up. I mean, I know GDP is doing well, exports have done reasonably well, government spending, as you mentioned, capex spending has done well, but I think consumption is a little sluggish. I think that's where there will be some immediate attention which needs to be paid, and I think it will be. I think the obvious thing on the agenda should be a rationalization of GST. We've been saying it for a long time, but now I think now is the time to rationalize the rates, bring as much possible into one band around 12 to 14%. I think that will give a consumption boost. And I think the other thing which needs to get a boost is investment, private investment. I think there is going to be some amount of crowding in by the amount of infrastructure spending that has gone on. But I think there are certain other kind of ease of doing business measures, for the lack of a better phrase, which can be put into motion pretty soon. One thing the government again has done very well over its last 10 years is building up India's public digital infrastructure, and that has of course done a tremendous transformation of the way benefits are transferred, and those that vote you will see materialize tomorrow. People who benefited from that. But I think that same digital infrastructure and that cutting away of the red tape and bureaucracy now needs to be applied fully to entrepreneurs and entrepreneurship, and that's really what will kick in with the that's what will help kick in animal spirits and a rise in private investment. So I think the agenda very clearly, at least for the next 100 days or 6 months or 1 year, has to be an increase in consumption and private investment, because then you will really see a sustained growth rate of 8% plus without the government having to lead it. And I think the only sustainable way in the long run of keeping an 8% plus growth is to have private investment and consumption leading it in a country like India. So I suspect these are the two areas which need to get attention and will get attention from the government.
I will take this point about private investment now across the panel, because this is a very important point, and I will go to Sourav for that. But before we go to Sourav, I wonder if our producers can play out what Prime Minister Narendra Modi had said at the India Today conclave in terms of setting the agenda for Modi 3.0. So viewers, he actually started this and said this in January, and you've seen a lot of reportage over the past few months, but take a listen into what the Prime Minister had to say then about the future agenda.
अगले 125 दिन में क्या होगा, सरकार क्या करेगी, सरकार कैसे करेगी, सरकार किसके लिए करेगी, सरकार कब तक करेगी, इसके रोड मैप पर काम कर लिया गया है। इसमें भी 25 दिन विशेष तौर पर युवाओं के लिए केंद्रित किए गए हैं। अगले 5 साल में कौन से बड़े निर्णय लेने हैं, इसकी भी रूपरेखा खींची जा चुकी है।
Well, that was what he had to say on the 125-day agenda, but let's try and play that conclave bite on what he had to say then.
5 साल भारत के इंफ्रास्ट्रक्चर को एक नई ऊंचाई देने वाले होंगे। आने वाले 5 साल भारतीय रेल के कायाकल्प के होंगे। आने वाले 5 साल बुलेट ट्रेन से लेकर वंदे भारत ट्रेन के विस्तार के होंगे। आने वाले 5 साल वाटरवे के अभूतपूर्व इस्तेमाल के होंगे। आने वाले 5 साल में आप भारत के डिफेंस एक्सपोर्ट को नया रिकॉर्ड बनाते देंगे। आने वाले 5 साल में आप भारत के स्पेस सेक्टर की एक नई उड़ान देखेंगे, गगनयान की सफलता देखेंगे। आने वाले 5 साल में आप देश के युवाओं के लिए नए सेक्टर्स का उदय देखेंगे। आने वाले 5 साल में आप भारत की सोलर पावर को घर घर तक पहुंचता देखेंगे। आने वाले 5 साल में आप भारत में ईवी मैन्युफैक्चरिंग में रिकॉर्ड वृद्धि देखेंगे। आने वाले 5 साल में आप सेमीकंडक्टर मिशन, हाइड्रोजन मिशन को जमीन पर बढ़ावा देखेंगे। और आने वाले 5 साल में आप निर्णायक नीतियां बनते, निर्णायक फैसले होते हुए भी देखेंगे।
So, Sourav Majumdar, you were there when the Prime Minister said this, and the question therefore linking it to what Dhiraj said, do you think these are the sectors, these are the priorities which will sort of get the private sector investment cycle to take off? Because we have seen some green shoots in the recent past, but much more is really expected.
Yeah, Siddharth, I think I broadly tend to agree with what Dhiraj said, that the effort has been over the last 2 budgets and continuously so to bring in try and crowd in private sector investment. There are green shoots, but yes, there's lots more to be done, because even if you remember our interim budget discussions with economists and experts, the trend was that for a little while more, I think the government will have to do the heavy lifting, will have to continue the heavy lifting. The green shoots are visible. Corporate results in many sectors have become better, but there is still stress. There is still stress in many cases in many sectors, and particularly the MSME and all that sector is still very much under stress. Things seem to be really at a real head over there. People are asking for more. There are sectors, there are pockets which need attention, and I think that's where the Modi 3.0 attention needs and will be put. But having said that, I think there is definitely a lot of cleaning up which will happen of the remaining part of the agenda in Modi 3.0. For instance, the IBC, the remaining tangled parts of the IBC where delays are happening, I think the government will have to focus on that and will focus on that. I think there are areas in DPI where will be taken forward. Digital competition is another area. Insurance is another area. So there are areas where I am sure ease of doing business, like Dhiraj said, and I agree with him, ease of doing business broadly is one area where Modi 3.0 will do it, because he has been talking about it. And let me tell you, I was talking to some key venture funds, venture capitalists not very long ago. The feeling is that there are deals cooking, there are deals which are big deals which are in the pipeline waiting to happen, but there is this sense of fear also that there is too much of regulatory overhang in many cases, sudden regulatory questions, etc. coming in. So I think ease of doing business is one area which needs really to be focused on, so that really entrepreneurial spirits, the animal spirits which we keep talking about, are really truly unleashed.
Shankkar, I want to ask you this, and you covered and known the way business and government cohabits in some ways in this country for decades now. Do you think, despite all that is said publicly and at photo opportunities also, the private sector is not really putting its money where its mouth is vis-a-vis investing in India, and in some ways enabling the government's task of job creation as well, Shankkar?
Well, there are two things. One must remember what happened to the banking sector after the irrational exuberance of corporates and other companies who went investment. This has happened thrice at least, in the 90s, then in the 2000s, and then later in the early part of 2011-12. So companies are very wary of this. Now you have an IBC and insolvency courts. All of this is one side of the story. The second side, more important, is if you look at the GDP figure, while GDP is grown, at 8+%. Private consumption is just about half. And that tells you that there is distress at the bottom of the pyramid. I mean, we can always wrap the story saying there is premiumization and stuff like that, but there is a certain pain which was visible also in the election rhetoric. So what this government will need to do is keep priming the economy. And we must remember that India started its journey in the 50s using the Harrod-Domar model, which is state-led industrialization. What we are doing now is state-led infrastructure creation. So that creates the impulse for private companies, the connectivity, all the issues are being sorted out. I dare say that we need more roads, we need more railways, we need better facilities, probably better airports, more 5G connectivity. All of this will happen because of this. What is lacking is that I think the element of certainty that the corporates are looking for in terms of the demand picture. The second part is the interest cost, which is inhibiting consumers from going out and buying. So the Goldilocks is basically sometime this end of this year or next year, the US Fed will cut rates and then the other economies will follow suit. And that will create the impulse for the consumption. Meanwhile, corporates will look for other ways. So the stock market opening up is a good, the rise and the rally is a good thing. Maybe there will be more IPOs, maybe corporates can raise funds in a different way and invest, but they will invest only when they see demand, Siddharth. Yeah. They have responsibilities to the stakeholders. So they just can't go and do it.
Important point, and I want to take that point, Shankkar, because you've given me this very good question, which I'll take to both the economists on the panel and then to you, Shail, because I want you to correlate it to market performance and corporate earnings. Madan, is demand still uncertain, and is that the reason that explains some of this reticence as far as private sector investment is concerned?
No, absolutely, Siddharth, because see, let's draw a distinction between the government and the private sector. The government goes in for capex because it has to do it. It doesn't look at the return on capital. Whereas if I'm an industrialist and I have to put in money as investment, I have to make sure that I'm able to answer my shareholders and say, look, I've invested 100 rupees and I'm getting a return of 10%, 15% or whatever. So I think the issue today is that most of the industries which are not in the infra-related sectors have surplus capacity. They are being confronted with declining demand. When I say declining demand, agriculture did not do well last year, so rural demand has been down. We have seen inflation. Now, even though we say inflation is coming down, we forget the fact that inflation still means prices are going up. Cumulatively, in the last 3 years, we've had 20% inflation, which means that my real purchasing power has come down. So while we keep tracking the quarterly results of corporates, and we have seen it almost every quarter in the last year, so 4 quarters in running, and if I also add the 5th quarter in 2022-23, companies, especially in the FMCG and the consumer goods segment, have been saying that we are waiting for demand to revive and we would be investing. Concern has been on rural demand, the issue of premiumization, working in the urban areas, not in a generalized fashion. I think that is what is really holding back overall investment. So I think we need consumption to increase, and for consumption to increase, we need to have more jobs. We need to have more jobs, meaning meaningful jobs, not Swiggy jobs, not construction jobs. They don't give you that kind of purchasing power. So I think the problem is a bit more deep-rooted. So what the government can do, I think they're doing through their capex, through the appropriate policy framework. But I think the private sector will always be slow to react. And while they will be demanding more and more, but at the end of the day, they need to see demand increasing, consumers spending more. Only then will there be more investment coming in.
Dhiraj, you raised this point and try and expand on that, and as you do, I also want to add that if demand remains uncertain for a certain period, Shankkar sort of spoke about a possible pivot happening in the near future. Will this be the time, and the upcoming budget, will it be the right occasion to further go down the path of fiscal consolidation, or should things continue the way are, at least for the next 4 quarters?
No, I think, there isn't any case to do a populist splurge or, put cash into people's hands. I don't think that is the way out right now, especially when, inflation is sticky and it's not quite come down to, comfort level. So I don't think, there's going to be any fiscal responsibility, and fiscal consolidation will continue. My mind, I'm looking more at, the kind of structural reforms which may be required also to boost investment. Yes, demand is one factor, but I think there are several other factors also in a number of sectors which dissuade or dampen the investment sentiment. And I think a lot can be done because yes, I mean interest rates will at some point have to go down. The real interest rate is too high. We know that dampens both consumer sentiment as well as investment sentiment. But that is something which will, as Shankkar said, probably happen towards the end of the year and not immediately. And I don't think the government can do anything about it or would want to do anything about it right now. So I think the answer right now, if you're talking about the next 4 or 5 months and why waste any time, is that you can do a number of as I said, easy process reforms and some amount of structural reforms, disinvestment. There are several companies which have been lined up, and the process hasn't been completed. Only Air India finally went through. So there are a number of things which have come to a certain stage and which can be taken ahead, which will definitely improve investment sentiment and bring in a lot more investment. So I think, and then I think what the government should also do right now, I mean, there were a number of things it did in the last term to boost manufacturing, like the PLI, for example. I think it's time also to do an assessment of that and see how much it has contributed in terms of jobs and investment. And, if some PLIs have done better, say electronics, we know that has done reasonably well in terms of mobile phones and so on. And maybe others haven't done so well. So maybe there's a case to reorient the PLIs towards sectors where more investment will come and more jobs will get created. So I think there are a number of incentives that the government has put in place, and manufacturing, I believe, is really the key to good jobs. I mean, there are jobs, as we spoke about, construction jobs, but those are not good jobs. They don't give you a lot of purchasing power. So we really need manufacturing. And I think they laid this, the first term was about Make in India, which showed the intent. The last term was about PLI and capital subsidies and, tariffs and so on. But I think this term, you got to go the whole hog and, do the reforms that are required to give manufacturing a boost. This is really the last bus for traditional manufacturing if India wants to catch it. And it's not only Indian demand, but we can cater to global demand. So the potential for jobs and good jobs is absolutely huge in manufacturing. The focus has been right. I think we just need to carry through with some of the other reforms that are required. If necessary, some states can be put to the task to lead, some of the BJP states itself. But I think the time is now.
Shail, let's get back into the markets. And I'm reading this analysis of what different election outcomes could mean for the market and the economy. And viewers, do keep in mind that directionally, Modi 3.0 is what all or vast majority of exit polls are projecting. But the scenarios seem to be different. For example, one scenario, BJP alone 290 seats, NDA 340 seats, BJP 260 to 290 and NDA 290 to 340. Shail, only for example for infrastructure capex, in a scenario of 340 plus, Bernstein believes that infra and capex will continue. More ambitious projects like bullet trains, highways, waterways will go up. Private sector capex will gradually take over. However, for the second scenario of a lower tally, government will slow down on capex, leaving space for private sector investment. Announcement of new projects can be slow. Do you agree with this analysis? And more importantly, the manner in which market participants voted in a way today, do they agree with this analysis, Shail?
Siddharth, just to add a line, just as there is no perfect economy, there are no perfect markets. And, we make do with what we get from the government as also the private sector, and then probably interpret it for the best of shareholders and best of investors in the market. My understanding is that, the direction of the polls points to somewhere like a minimal of 330 to 340 for the BJP, which is about 10% more than their second term. So that essentially means that the BJP has a fair, how should I say, leeway in creating better infrastructure, more highways, better railways. Remember, this is what has actually got them the good points from both investors and users of these products.
Shall
across North India, You and I, we stay in Noida, and we know how the highway network has improved around, say, Noida. The budget is there in a
Shell,
month
we
from
seem to
now.
be
The
getting
capital
you on
expenditure
a
is
bad line.
about to take place.
Shell, we seem to be getting you on a bad line. I'll come back to you, but I want to quickly go to Sourav. Sourav, one of the things about the markets that we've consistently heard is that the Indian markets are very expensive, and today, as prices went up on the markets, this point about rich valuations has become richer. From a corporate earnings perspective and the manner in which many corporates have announced large investment plans, including the big conglomerates, do you think the markets are in tune with the reality of corporate investment and profitability, or are they ahead of what is reality?
No, I think one part is, of course, what the market sees as actual investments which have been announced. The other part, as we know, markets always work on expectations, Siddharth. So therefore, I think the other bullishness, the other part of that bullishness stems from what they expect to happen in Modi 3.0, and therefore what the corporate reaction to that will be. Now, we all know that, just like was discussed a little while ago by all the other panelists, that everything is not yet so rosy in terms of the actual corporate investments on the ground. Yes, there are green shoots, some improvement in corporate earnings has happened, of course, but is that going to really translate into actual broad-based investments on the ground? And that doesn't seem to yet be happening. The large investors, the large groups are investing or have announced investments, but it's not really percolated to the broad level in which it is expected, which is why I said that the heavy lifting by the government will need to continue for a little bit longer, and I think we will see signs of that in the forthcoming budget. But the fact of the matter is, I think the market works on expectation, and a lot of the bullishness you see is about the fact that the new government of Prime Minister Modi 3.0 will work on some of these areas and clean up some of the remaining reform areas.
Before I go back to Shell and then to my other guests, sort of one quick point, a global view of sorts from you, given that a recent cover of Business Today magazine had focused on Amazon and the e-commerce digital space. Through that conversation and other similar conversations that you and the team is having, what's the global take on India, without even the exit polls or the results tomorrow, as far as India as an investment destination and a market is concerned, Sourav?
I think that's a very important question you ask, Siddharth. I think there is very little doubt, exit poll or otherwise, that India is an opportunity which is waiting to be tapped or is being tapped at this moment, and there is a lot of upside there in the Indian economy, which the global investors, global companies which are in India or are looking at India are waiting to be tapping. And I think that is very clear. Whether you look at the VCP space, whether you look at the Amazons of the world, the Walmarts of the world, I think the next opportunity lies in the tier 2, tier 3 economy, which is the next frontier for many of these companies. I think that is already underway. Now there is this whole other issue of demand not being enough. That's a concern, of course. But I think the overall direction, if you look at it from a global perspective, is that India is an economy which surely cannot be ignored and will not be ignored. So they are definitely looking at India, whether it is from the private investment space or whether it is from the big corporations which are working in India, in a very serious manner. And I think that's where the policy continuity part also comes in.
Shell, a quick one to you before I go to my guests. Do you think that earnings need to catch up after the initial celebrations of the election results that we are likely to see through this week, beginning tomorrow?
Absolutely, Siddharth, and especially in the PSU bracket where stocks have actually gone up between 5 and 7 times. So while the top line of many defense players is going up by about 15 to 20%, but here are stocks that have multiplied 5 or 7 times over the last 2.5 years. Therefore, earnings definitely have to play a catch up. And markets typically, distort a particular sector in terms of price in the medium term, and then again look for newer sectors to come up and wait for the previous sectors to catch up either in terms of earnings or have a time and price correction both. So definitely I believe that a large part of the corporate sector needs to really catch up with the enthusiastic stock prices that we have seen in the markets, especially over the last 2 weeks, Siddharth.
Okay, viewers, we'll take a few more questions before we wind down the program. But before we do that, I want to come back to the broader focus, the political economy focus, and the question that we sort of touched upon at the start of the show, Modinomics 3.0 versus Dole'nomics. And to set that context, I just want to request my producers to play out something that became one of the most viral memes in this election, khatakat, khatakat, khatakat. So let's take a quick listen into khatakat, khatakat, khatakat.
के सारे ग्रेजुएट होल्डर, डिप्लोमा होल्डर, उन सबको 1 साल के लिए अप्रेंटिसशिप मिलेगी, 1 लाख रुपए साल का, 8,500 रुपए महीने का, खटाखट 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 उनके बैंक अकाउंट में जाएगा।
खटाखट खटाखट खटाखट। क्या मोदी जी को रास्ता दिखा दें? खटाखट खटाखट खटाखट।
और जो लोग अपने साथियों को विदेश पहले ही भगा चुके हैं, वो अपने मित्रों को विदेश एक एक कर के भगा चुके हैं। खटाखट खटाखट खटाखट।
Shankkar, khatakat, khatakat, khatakat is a new addition to our political vocabulary and even on a market show. But I am reminded of 2019 when UP ke ladke was a similarly sort of viral term. Is khatakat, khatakat, khatakat something that the middle class, the senior citizens, and perhaps a large section of women voters, did they run scared from this kind of terminology that was used?
I don't think it's too much about the terminology. Everybody enjoys a good khatakat, I guess. But what worries people is when you have a large coalition, how are those pieces coming together, and what kind of pulls and pressures would be there. Suffice to say that the leading members of the India Alliance, while they may have had some ideas, they may have expressed the fears or concerns of the bottom of the pyramid story, whether it's the youth or the agri-distress. Their inability to articulate a cogent line may eventually sort of hurt them. Having said that, the fact that there is this distress about issues, for instance the Agniveer program, for instance the MSP issue, for instance the farm laws issue, all of these issues have registered on the barometer of the Prime Minister as he has travelled around. I expect that there will be a response to that in the budget. I also expect that there will be some kind of revenue mobilization effort, and this might be in the reframing of the capital gains tax, it might be in the alignment of the GST to a new neutral rate, it might be in some form of cess on higher profit levels at corporates. So there is this thing, that buzz that is there in Mumbai, and there is the buzz that is there in the North Block, that how do we adjust to the issue. So if we see capex, the one C that is important for capital markets, there is another C that is important for markets, and that is consumption. And so there is going to be an effort to stimulate consumption, not in the doleful way or in the helicopter cash way. I think we'll see some kind of scheme there. I'm sort of concerned that they should not get too enthusiastic on either side of the equilibrium.
Okay, Dhiraj, I want to come to you, and this is really the sense that we have that the budget now after the election event is done and digested in a matter of 2-3 days, this week's perhaps. That will, the entire narrative will focus on that and the 100-day, 125-day agenda. Top of mind, what do you think is the likely course that a Modi 3.0 government is expected to implement?
In terms of the budget, I mean, I think sometimes, all of us expect a lot from the budget, and there isn't that much room for maneuver, in the sense that, a lot of expenditures are already committed. So in terms of, if you're talking about a new big ticket programs, I don't think, again, that's going to be the case. And I don't think that's the style of the Prime Minister either. I think he focuses much more on, implementation of, programs efficiently. But I suspect there may be, given sluggish consumption, perhaps an increment to the Kisan Yojana in which they give the 6,000 rupees, for example, or as a rationalization of GST, or maybe cut in income tax. Though I don't think that again addresses the problem, because the people who are struggling for consumption are not those who pay income taxes. So I think some amount of rationalization of indirect tax is a possibility, and through some existing scheme rather than a new scheme, there may be an attempt to put a little more money into the hands of people who need to spend it the most. So maybe, as I said, maybe the farmer scheme, Kisan Samman scheme could be one of the things. But otherwise, again, I suspect if you look at the pattern of the last few budgets, they tend not to be too many big ticket announcements of big schemes as we used to know the budgets for. And I think again, but what I would be looking forward to is again a roadmap. What the Prime Minister said at the conclave, and of course he said building more roads and more Vande Bharat trains and all of the infrastructure stuff, yes. But I'd like to see what the vision is for entrepreneurship, really. And I think ultimately I'm of the view that over the next 5 years, or over the next 10 years, over the next 15 years, elections may come and go and maybe fought on different issues, but you can see one of the key issues that the election campaign highlighted again and again was jobs in one way or the other. Unfortunately, the debate got stuck around reservations or redistribution and so on. But I think, coming up with productive jobs and good jobs is definitely something. The bar has been set, especially if they come back with this kind of mandate. The expectations are high. Absolutely. And frankly, I don't think the 1 lakh khatakat meets the aspirations of people anymore. You need more than that.
Absolutely. And there were several memes on that as well. I come to you, Madan. Are some difficult reforms that at least some of us analysts and people sitting in echo chambers expect, are some difficult reforms ahead, or would it be that given the fact that there's a 100-day, 125-day agenda and therefore that is immediate, some of the more difficult things will be left for later on?
No, I think, Siddharth, in my opinion, I think the biggest reform which is missing, something which Shankkar has actually alluded to, are the farm laws. Because I think agriculture is one sector which has been largely left out. And I think there's a lot of political economy involved when it comes to implementing the farm laws. Now, we all know that the farm laws are really progressive, something which can actually change the overall scope of agriculture in the country. But there are obviously vested interests which come in the way. So I think now that the government has the requisite majority, I think the task would really be to make sure that you're able to make agriculture more resilient, commercialize agriculture. So I think that's one thing where they should be looking at. And I think it's second area which one should be looking at, something again in the area of agriculture, is how do you actually formulate trade policy? Because I think something which has been affecting the farmers, and this is because there's a basic contradiction which is there. If I give a higher price to the farmer, the consumer has to finally pay for it. And we want to have the right kind of balance between food inflation and a reasonable income for the farmer. So I think in terms of the export policy, like recently we had the thing on onions, where you suddenly say that there is a ban on export of onions, and the farmers are not too happy about it. We had the same case for wheat earlier, for rice earlier. So I think formulating a cogent trade policy for agriculture, number one. Two, in terms of introducing the farm laws, getting all the stakeholders involved and making sure there's some kind of a solution which is right. I think these would be the tough decisions. The simpler one will, of course, be to address the SMEs. I think that is something which I would expect could find some mention in the budget. A special PLI-like scheme for the SMEs, because given the fact that they contribute to exports, they contribute to industrial growth, I think having something out here could definitely help in spurring this particular segment, which will also have employment benefits since they also employ a large number of people.
Shail, FIIs, are they still on the sidelines? Are they going to await the final outcome tomorrow? And what about this bull run? Does it have enough legs to last for a while?
Siddharth, I think the ones which have the strongest stomach have still their shorts on, and they are waiting for the actual electoral outcome to come in before either they square off their short positions or add fresh ones. So that will be sort of decided by 12 noon tomorrow, because it's going to be a very quick count either way. So more people will come in if this 330, 350 seat mandate comes for the BJP via counting tomorrow. And I have absolutely no doubt in my mind that if 330 and 350 is actually the number, Siddharth, we are sitting in a trending bull market which will dwarf the gains that we've made over the last 10, 15 years over the next 5. I have personally said always that one must tighten their seat belts. This is a real big one, and we'll be creating a lot of wealth over the next 60 months compared with what we've done over the last maybe 120 to 180 months. This is a big one, Siddharth.
Shail, a quick one. Akhilesh Yadav today said that all of this exit polls is part of a larger conspiracy to benefit a few on the stock market, and that comment of his also went viral. The markets completely ignored it, but lots of people asking this question, and how would you respond to such allegations that all of this is a big setup to lure the hapless poor retail investor? Shail, that question was for you.
Siddharth, for a political party that is going to get less than 5 or 7 seats in UP alone, I think it's best left ignored. I am the least qualified on this panel to comment on either macroeconomic pictures or politics, but I know what not to see and what not to hear. And frankly, this particular comment was not to hear. If there is money that can raise the market capitalization of India by 14 lakh crores in a single day, I think one must pay more attention to that one rather than this off-the-cuff remark.
Absolutely, Shankkar.
I just wanted to ask Shail, what is the level of shorts that are there, that were there yesterday? How many got wrapped out and how many are still there? I believe there was some 6 million or something.
Sir, that level of shorts was somewhere to the vicinity. I'll just give you the percentage. It was 82% shorts versus 18% long for foreign institutional investors. That's sort of evened out 60 to 40. The ones with the deepest pockets have held out to those shorts because they've made 3% percentage points on their passive holdings, which are to the tune of $700 to $750 billion. So if they're 3% higher on that one, which is about $15 billion, they're losing a couple of billion here, which really does not matter. End of the day, you must be making money. And if by God or some, some quirk of fate, the short works, then they would be making money there as well.
Okay, we started with the markets, we are ending with the markets, and viewers, just one small bit adding to that. In the Lok Sabha campaign, one of the points that many people said that unlike 2014 or 2019, there was no wave visible in the campaign. But if you look at how the markets have voted with their money today, it's very clear that there is a Modi wave on Dalal Street, and that's even before the results. We'll end this discussion here, thanking all our guests for spending so much time with us, and leave you with this thought that if this was today, tomorrow is going to be even more exciting. And beginning 7 a.m. all across the India Today group and on Business Today, you will get the actual latest tally of how India and Bharat voted in the 2024 campaign. And through the rest of the day tomorrow, we'll keep bringing you the best market, business and economy voices to help you decode and understand this biggest verdict of 2024. I thank all my guests once again today, and you the viewer will be back after just a short break. Stay with us.